Well, at a time in the markets where there's a lot to think about, what happens with interest rates, with the profit reporting season telling us, it has been hard to ignore all that has been happening on the campaign trail in the race for the White House. And it has also sparked a fresh conversation about what happens to different parts of the stock market depending who wins the White House, and also what generally happens during election cycles for the stock market, more broadly speaking. I want to bring back Lori Calvasina. She is head of U.S. equity strategy, RBC Capital Markets. And Lori, first off, are you getting questions from people about the election?
Oh, we are. And, you know, it's funny. I mean, it's summer, and I've been talking about this for a year. I would say especially non-U.S. investors, especially, you know, definitely some Canadians, but especially my European clients, they've been wanting to talk about it for a year. So it's already been a long election season for us. Okay,
so first things first, when there is an election going on, regardless of all the drama on the campaign trail, what tends to happen in the stock market?
So it's actually interesting. It kind of, there's a lot of noise in any given year, a lot of unique things, but the patterns tend to be pretty similar. You do tend to see, you know, kind of a subpar gain, but you do tend to be positive. You tend to be stronger in the second half than the first half. And you tend to have a couple of pullbacks during the year, one in the spring, one in the fall. We tend to really see a post-year election pop as well, as long as we know who the winner is. We didn't have that in 2000.
Okay, well, we can get into some of the specifics in a second, but to your point there, because we were already talking this morning about, you know, whether there's going to be a pullback in the market, and for the most part, it's been a pretty bullish year, broadly speaking. But we're kind of now, when you look at the charts historically in an election cycle, we're now kind of starting to move into the period where things can get a little more choppy for a couple of months.
Yeah, you know, it's interesting. I have this chart I built on the seasonality of an election year, and we go back, I think we went back to the 30s, but the pullback we had in April in the S&P 500 was actually, you know, a couple weeks ahead of schedule for the typical spring pullback that we see. The second pullback tends to start in early September. So I've said, you know, with this move that we've had lower recently, in the backdrop, right, there's a lot of uncertainty that's emerged about the election. Maybe this is that second one also happening a little bit ahead of schedule.
Okay, and then there's this issue around the sectors, and we actually had a conversation earlier in the program about, you know, different sectors that might benefit. Maybe you just look at it. Does, you know, an area like value then outperform? We were sort of talking about sector rotation earlier. It seemed like in 2016, kind of the move into some of the underperforming value stocks ended up being a winning trade. Or do you start looking and slicing and dicing all these different industries just based on, you know, policy pushes and which you know, candidate emerges victorious? How do you think about that stuff?
So look, I think that there's a lot we don't know about both sides right now. When I talk to my colleague Halima Croft, she always says, you know, we need to wait a little bit. And I think I'm coming around to that point of view, especially on Harris. There's a lot that we don't know. There's a lot of digging going on right now. But I would say if you look at the historical playbook and just, again, all presidential election years, because markets typically do better in the back half, cyclicals tend to do well. Financials, energy, industrials, materials. I think that's because as the market rallies back, it starts to sniff out a winner. It starts to figure out what those agendas look like. And whoever wins, right, is selling a better vision for the country and the economy. So it kind of makes sense. You don't want to own defensives in that environment. Now, an interesting nuance on 2016, I got a really great question from a client last week. The 2016 playbook absolutely tells you buy financials, buy energy. You know, there were policy reasons. There was also a lot of economic optimism back in the summer of 2016 around Trump. But I had one client who was worried about the inflationary pressures of a potential, you know, Trump version 2 on immigration, on tariffs, on that kind of thing, kind of worried about the inflationary impact. Said, what if we shouldn't be looking at 2016? What if we should be looking at 2018 when the trade war unfolded? We crunched those stats, put them in a report we put out earlier this week. It tells you to run away from the value cyclical trade, run away from energy, materials, industrials, own defensives. I don't, you know, I'm not necessarily saying that's the right way to do it, but I thought that was an interesting question, and it really just underscored for me how the same, you know, sort of, I would just say general optimism that we saw in 2016 emerging on kind of the Trump policy agenda, it's being questioned this time around. It's not a uniform view this time around.
Well, I mean, the subject of tariffs, like I would anticipate we're going to be talking a lot about that as we get closer, because whether it's, you know, cross-border trade or individual sectors, it's a big theme. Technology, where does technology fit in here? It is an interesting, and it's very rare to see Silicon Valley lean into a Republican candidate, but, you know, that's been happening at least in terms of the political donations. But, you know, technology, does it just rise above all the noise because they've got a, you know, very strong business model. What happens to tech, in your opinion?
So if we go back to kind of the last 8 presidential election years, looking at that second half performance, tech actually usually underperforms. I'm not really sure why, except for the fact that maybe it's a little closer to defensives than cyclicals in terms of just being kind of a secular component. But if I think about, sort of how the market has traded this year, if you look at Trump's average in the betting market, he's been highly correlated with S&P 500 performance, U.S. relative to Europe, and growth versus value. And when we dug into sectors, we found that Trump's average in the betting market has actually been pretty closely correlated with tech sector performance, semi, software, that sort of thing. I'm not exactly sure why. I think it may just be that buy the U.S. was a Trump trade that emerged. But I think, we see this correlation that's existed. And now there are all these questions that started to emerge over the last couple of weeks about, how do these two candidates, which one is really better for tech? I don't think the investment community knows right now.